Yo, what is going on YouTube? I'm Evan, this is Marksman Trading, and the topic of today's video is how to scale in and out of trades. So we took one small green trade on Meta, and even though it's a small green trade, we learned a lot. So if you guys are like me, trying to understand the process of scaling into and out of trades, then this video is for you, because I showcase why I got in, where I got in, the levels I risked to, why I exited, and just about everything that has to do with the process of scaling in. So stay tuned for that. If you guys are new to the channel, be sure to subscribe. I showcase my trading journey one trade at a time. I trade both stocks and futures. I trade through the prop from Apex. So right now they even have a discount, 71% off all evaluations. Use the coupon code below or the link in my description to claim that discount. Now let's get into the recap. Alright guys, here's the trade on Meta, and as you guys can see, it is a small green trade. We only made $3.72 on this trade, and you guys may or may not know, but I'm only risking $5 per trade in this stock account. And the reason for that is because I'm still a growing trader. I don't have proven consistent profitability yet, and therefore I'm not going to risk too much per trade when I don't have an edge I can trust and build off of. Alright, so before we review the reasons for taking these scalons into this trade, let's review the thesis for this trade. So as you guys can see, it is a breakout on the daily chart. We are breaking out over this 505 level, this kind of supply zone up here. So I was hoping to see it break above it and hold above it for a move higher. As you guys know, or may not know, when you're taking a trade, even if it's just a scalp, you want to kind of have a bigger picture idea to the trade, because that's going to give you better edge, especially when multiple time frames are kind of aligning. So on the 1 minute chart, we have a higher high at 939, followed by a higher low at 946, and then another higher high up here at 956. So when you see a higher high, a higher low, and another higher high, that's telling you that we're in a trend. And to trade a trend, you want to get on pullbacks, right? But not any pullback. You want to get on a pullback that's not too deep, because if it's too deep, shorts might be taking over and bulls could be losing momentum. And if it's too shallow, you could mess with your risk-reward ratio, and it could also just keep moving lower. So this Meta pullback was actually perfect, this trade I took. And the reason why is because it's roughly a 50% retracement of this huge move up from 946 to 956. And it's also a setup I have defined in my playbook. It's an opening range break and retest. So as you can see, the opening range over here at 939 is 505.90, and that is based off of the 15-minute candle at 930. And here you can see at 10 o'clock, we clearly retested that. So I took my first entry over here at 10:05. I took one share at 506.01, and this is a starter position. A starter basically allows you to get a feel for how the stock is moving without putting on too much risk too fast. The goal with scaling in is to limit your risk and also slowly build your position as you're getting proven right on the trade. So when I'm trading levels, like I am right here trading this 505.90 level, I want to see a stock soak that level. That basically means I want to see it consolidate, usually with bottoming tails, and soak flushes like it did at 1013, soaking that 1012 flush, and just have it kind of base out and hold over time. So the longer a stock is consolidating, the more assurance it gives me that it's going to work in my favor. So as it consolidates for longer, it allows me to scale in more, so that way my winners are bigger than my losers. Because if it were to fail right off the bat on just a starter, I'm losing maybe at most $1 or $2, but if it's proving me right and I have a larger position, that means my winning trades are going to be bigger because I'm going to have more size to them. So I was fully scaled into 4 shares on this trade. I had an average about like 506.22, I'm pretty sure, and my stop loss was all the way down here below VWAP at 505. So basically, if we closed below VWAP and moved lower, I would have exited this position. The reason why I had a wider stop loss and it wasn't right below 506 or 505.90 is because a lot of times on these pullback trades, we do see retests of VWAP. So just in case it did want to retest VWAP and then bounce higher, I wouldn't get stopped out right away. That's why you also don't want to scale in too fast too soon, because if I put too much size on over here at like 1005, 1004, 1006, and then it kind of broke below 505.90s, I would have to get out without really being proven wrong in the trade. And that's just because I had too much risk on, and I was uncomfortable in the position because I was down too much. So when I scale in, I try to enter on dips as it's kind of holding the level. So like a good example of that is this 1008 candle, but I don't always just enter on these dips. I try to enter when price action is proving me right. So that's why I also entered here at 1007 on this green engulfing candle, because this engulfing candle and this volume was showing me that buyers were stepping in. And that's showing me and adding to the thesis that this trade is kind of working in my favor. So that's why I took one more share up here at 506.40. And I only took one share up there because I didn't want to skew my average, right? And there was still a possibility, like it actually did here, of it moving lower. So this trade was going great so far. I did everything right. I felt like I had good entries. I had a good thesis behind it. I traded my plan. My emotions were in check. But unfortunately, my exits were what killed me today. So right here, I took out 3 out of 4 shares at 1015 on this pop to 507.22. And the reason behind that is because I was trying to proactively cover. In my mind, I was proactively covering on a volume pop because we were struggling getting past 507.20s. but that was just a bad mindset to have. On a day like today, where the market is ripping, meta is relatively strong, and my thesis is playing out, I should be at least playing for the highs of day. So I should have at least been looking to take off at like 1027. Definitely not that soon. And I did take off one at 506.92, and the reason why I left one share on is because a lot of times when I'm exiting a position, I leave a small portion on as a runner, and that's basically allows me to kind of see what the stock is going to do. I already captured like the meat of the move, but let's see how much more I can get out of it. And so I was trailing it with the 1 minute 9 EMA. So if it closed below that and moved lower, that's where I'd get out. So unfortunately, I did get out at 1024 at the lows of this candle, right before it kind of popped up one more time. So I'm still working on my exits, but the entries were good, the thesis was good, and I did take the trade. So I'm really proud of that. So overall, it was a good trade. I learned a lot. Hope you guys did too, but there's still a lot left to improve on. So that wraps up this video. Be sure to comment, like, subscribe. Also hit the notifications bell so you can stay up to date with all my trading content. Also, let me know how I can improve these videos. I'm really trying my best to put out good quality content, kind of share what I'm learning throughout each trading day, but I want you guys to get out the most of it. Be sure to snag that discount through Apex, 71% off right now, and it only lasts 6 more days. So use my coupon below or the link in my description and claim that discount. Have a great day, y'all. God bless.